Raghee here, gang. How y'all doing? Happy Tuesday, everybody. All right. I hope everyone's doing well. We're in for a rock'em sock'em kind of week with the earnings we've got, probably the most impactful week of earnings because of the weighting of the individual stocks. So while a lot of the market's got its attention going on, you'll notice I have a chart of copper up right now. And the reason I have this chart of copper up is that there are some very interesting things happening with the copper gold ratio. This is something that Double Line talked about many years ago, and it's a precursor to maybe some interesting movement that could happen in the bond, 10-year bond. So with that in mind, extra cup of coffee this morning. We've got a lot to look at in terms of yields, while the market is potentially going to be distracted by a lot of these earnings. And by the way, gang, I think there was a great line from the great Stan Druckenmiller. And Stan Druckenmiller talked a lot about the way in which the markets are not moved by earnings, by earnings per share, by rev. That's not what gets the market moving higher or lower. The main reason any market goes into any kind of trend, chop, down, up, is because of monetary policy mostly. Monetary policy, money supply, and those are two of the four pillars of macroeconomics. And so right now, yeah, there's a lot of curiosity as to what Tesla, Microsoft, Facebook, Alphabet's, what are they going to do to the market? Okay, this is some momentary volatility. I think, generally speaking, it's going to be noise. Keep an eye on that gold copper ratio. That's something we'll be talking a lot more about in the Sector Secrets Mastery and also in the futures room, because those are two futures contracts that are oftentimes credited for leading movement in yields. And if you've been watching silver and gold for when they might move, I've talked a lot about that in previous free videos. Keep an eye on the bond market. All right. Okay. So with that being said, what do we have today? First off, all right, let's kick this off with a look at Intel. Sure. All right. So let's jump on over to Intel. I'm going to go ahead and grab there we go. I'm going to grab the trading view charts. Let's get into it. All right. What do we have going on in Intel? All right. So here's your earnings release. There's your response. Now, here's what's really interesting. Stephen, where did we land? And we have a really nice volume ledge that we're sitting at right now. Point of control. Look at that volume ledge. There's that one that we were sitting at, and then the market moved lower. One of the reasons that I do not play the actual earnings release is because of movement like this. If you've watched some of the previous videos about earnings that I cut about the 642 earnings process, you know already then that the prime, I think also, I don't want to say easy, I don't want to imply any kind of ease, but the best time to be setting up a trade that will benefit from some kind of earnings volatility in the immediate, like really close, maybe inside of a week to earnings, is to collect premium, right? To take advantage of the higher implied volatility. I woke up with a cough and I think I'm allergic to my cat this morning. I'm not sure what it is. I woke up sneezing like nobody's business. So sorry. I don't know. I'm going to have a sneezing fit in a moment or not. I might have passed. All right. Don't you love live video? All right. So what we have is that window of inside a week before earnings, where premium collection is really where your head should be at, and liquidating calls that you may have bought in the ramp up of that 642 window. Now in the aftermath, now we wait for the dust to settle. And now that the dust has settled, where we are in Intel right now is actually pretty darn interesting because we have this neat little sandwich of this volume ledge, point of control, and the 200 EMA. Take a look at that, the 200 prop dots, those white dots that are sitting at the just below that, that's going to be a really interesting little zone. Yellow market means now we're talking about overbought, oversold, slow stochastic, maybe a ready aim fire. And I think you're right as rain. Keep an eye on that one. All right, Warsan asks, how does AMD look before earnings post market? All right, so gang, I'm going to save you guys a lot of typing and myself a lot of breath. Anything that is right in front of earnings, not my bag. Okay, so if you're interested in playing earnings, check out the Tail Wags the Dog video that's at the Simpler Trading YouTube channel. I do not play this kind of proximity in front of earnings. And because I don't play it, I'm not going to speculate on it. I've got no skin in the game here. After earnings, maybe, but we have to see what happens to then look at which kind of volume ledge have we moved to. Have we moved up to a volume ledge, down to a volume ledge? You know, where does the market sit after earnings? So again, gang, I do not play anything this close to earnings. And it's funny to me how many people look at earnings 2 or 3 days before. Stop doing that. I mean that sincerely. Don't let that be the summary of what you do for earnings, okay? We've talked about the window in Charts and Coffee and free videos for weeks, okay? Check out that content. I'm not holding something back. It's not like I'm doing some, secret strategy in front of earnings. I don't play in front of earnings. I do not. Now, for those of you that want to seek out a different strategy, Danielle here at Simpler Trading, she'll look at this window. She's got strategies that she likes. She's got tools that she uses. It's not going to be me, okay? So, by the way, in front of earnings, would I have played AMD? I would not have, okay? I would not have. And we only know what's going to happen after once we get the price action, okay? All right, so let's talk about XLE and Exxon. All right, so this is an interesting one, Deborah, because XLE has been very frustrating to me. We have a really nice trade in crude. Not terrific. It hasn't, exploded higher yet, but we're sitting above some key volume levels. Even though the market trend has been broken, it's a sideways market that's coming after an uptrend, so the expectation is continuation. Never, never assume a reversal after a market has consolidated when the previous trend was up. Yes, there are V-bottoms, and those are typically going to be put in proximity to anything the Federal Reserve does. Barring that, always, again, we're just playing probabilistically, always assume a continuation. So with that in mind, Deborah, I like the long side of XLE as long as crude can head higher. I would be very patient, though. The timing for your question is cool because what we have starting tomorrow is OPEC. We have the OPEC meeting. OPEC is essentially the central bank for crude oil, gang. So do we already know the market's priced in the output increase? What could send crude oil lower? What could send crude oil lower is an extension beyond what it's already priced in for how long the output increase, in other words, more supply hitting the market, and if they decide to increase output more than they already have discussed. So those are the kind of things that could shock a market. Shock meaning rediscounting, recalibrating to the new knowledge, the new information. So the other part of XLE is, at what point do we start to see rotation, right? At what point do we start to see the laggard sectors are now going to get a little bit more attention as the leaders are in some ways looking frothy? Okay, so keep that in mind. I do think energies would benefit from a little bit of rotation. I think we could see some of the sectors that have not benefited quite to the degree that the broader averages are moving higher. What are those lagging sectors? And so this would be one of those places. If we can't time sector rotation, gang. That's a fallacy. We know, though, with a high degree of probability when that could happen. And usually that's going to happen when the divergence between the lagging and the leading sectors gets wider and wider until finally it's almost like the dam breaks. Again, we're never going to have specific timing. There's no bell that goes off, but we will have, to a pretty high degree of probability, the ability to understand where the rotation is going to come out of and go into. That's all we can do. And that's why I'm still pretty optimistic about Exxon XLE. So Exxon XLE is a very connected conversation, and you could throw CVX into that as well. Those are the top two weighted names in energies. All right, so next question is BILL. Hey there, A2K. All right, BILL. Again, not a trending market. I prefer to focus on trends. And right now, again, we're not lacking any trends, right? Now, if we have some sort of continuation or reversal pattern like a 1, 2, 3, then terrific. And if you don't know what that is, again, if you're not familiar with that pattern, if that's completely new verbiage, check out countdowntrader.com. The last 3 or 4 issues have been focused on this pattern that was popularized in the mid to late 80s, even into the early 90s. It's a pattern that is part of Dow theory. And if you want to know more about it, we're talking about Dow theory patterns well over a century after they were sort of explained, discovered, and there's a reason for that. They just flat out work. You're going to notice 1, 2, 3s have pieces of a lot of other patterns that you might be looking at. I'm a big fan of harmonics. You can see 1, 2, 3s and Gartley's. I'm a big fan of Fibonacci. There are Fibonacci ratios for ideal 1, 2, 3s. You might like head and shoulders. You're going to see a 1, 2, 3 inside of a head and shoulders pattern. So you understand the 1, 2, 3, you're going to find a much more accurate and higher degree of clarity in a lot of patterns and processes that you're probably already doing and didn't realize that 140 years ago, Charles Dow talked about this phenomenon of a 1, 2, 3. So check that out. If we have something like that here in BLL, which we might, it could be interesting. The swing high did get taken out. I'm certainly not bearish, but not the kind of market that I would focus on. And again, if I'm inside of 2 weeks to earnings, it's probably not going to be enough time to get the fill and the follow through. And again, one of the main precursors to my willingness to play something going into earnings is going to be a double green uptrend. A double green uptrend denotes 8, 13, 21, and 34 EMA structure that is bullish, that is identifying and qualifying the uptrend. That's going to be your highest probability bet. All right, gang? Okay, very cool. So next up is, can we take a look at gold? Sure. So gold goes back to the initial sort of quick discussion we had about what's going on with rates. I think gold and relatedly silver have been frustrating a lot of traders simply because they're looking in the wrong place for the catalyst, for the reason. And they're also looking at the wrong metals. Now, unfortunately, the metal that I've been basically talking about for months now, copper, has sort of now become the market everyone's talking about. I kind of hate when that happens. What happens when a trade becomes consensus, meaning the sheeple now know about it, is it goes parabolic. And then it becomes very tough to trend trade because the frenzy is on like Donkey Kong. So for us, this is now going to turn into a momentum player's market. I wish them luck because the real money's already been made. But copper is still going to be important for us because, again, that copper gold ratio could tell us a lot about what's going on with the direction of bonds. And then bonds, again, feed gold because of that real yield. So if you are looking at gold, you need real yields to drop. Okay, you need real yields to drop. You need the inflation to either continue to tick up, but you really need yields to move lower because that's right now probably the best case scenario for the market to see real yields drop, which is to see the bond market move higher. Higher ZB, higher TLT is going to be a lower yield minus that inflation rate is going to give us a lower real yield number. So if we can finally get, and I think bonds are ready for this move, we're finally seeing the kind of pattern. The 1, 2, 3 is done. We had a 1, 2, 3, boom. Look at all those blue grab candles, gang. Look at the volume ledge. This is a really good looking chart. If you don't want to play bonds, that's fine, but we're going to be looking at TLT pretty closely because this is a very good low IV. This is a good environment. And I think this is going to be not only interesting, finally, for traders looking at gold, but also traders looking at silver. So TLT, GLD, SLV, Now we're looking at that market, gang. 1, 2, 3 is complete. The bond yield is really looking like it's getting very compressed, and we can see those volume ledges. This is looking interesting now. The timing is really, really good. So, in the Sector Secrets, gang, we'll be diving into this. In Simpler Futures, we'll be diving into this. And here in Charts and Coffee, gang, I love this morning crew, and thanks always for coming out, because I'm going to give it to you straight up. All right. This is now the time to start looking at this. We're sandwiched between 2 volume ledges. This is a sexy market, gang. It really, really is. So look at bonds, understand the real yield. And that's where a lot of traders, look at the store of value in gold. That's fine. Inflation hedge, I get it. But the catalyst has got to be that drop in real yields. All right. So if I haven't driven that home, I hope now that really resonates and the light bulb goes off. IBB looks like it's in a weekly squeeze. Hey there, Anthony. I just renamed you right there. Sorry about that. Okay. IBB, weekly squeeze, you said? Let's see what we have here. So I'm not going to, squeeze is not my go-to pattern, so I'm probably the wrong person to ask about that. I usually have a pretty good idea about what it's doing, because that's the flagship pattern here. It's simpler. But what I will tell you is this. For me, the precursor to a squeeze is the underlying market environment. Every indicator, including the squeeze, this would be ready and fire squeeze, looking at MACDs, etc. Every indicator has an underlying market environment that it works well in. The best environment for a compressed market tool, the best tool for it is the squeeze. Nothing beats getting a step out ahead of a momentum breakout than the squeeze. That's why it's so great. So having said that, what I don't have an IBB, and it very well might be, so again, what I have is a little bit more stringent a requirement. So if you're looking for a squeeze, look at that previous ZB I was talking about. That's what I'm looking for. Looking for a compressed market. I'm looking for the squeeze to give me a heads up as to when that momentum is going to give me that split second jump to get in before everybody else. That's what's so magical about it. But for me, the precursor has to be a compressed market. All right. So it very well might be, but I'm a little bit more fussy about how I deploy that very powerful tool. And so that's what I would be looking at. Thoughts on Amazon and a potential split rumor? I don't. You can't trade rumors, right? You can only trade underlying market trends and setups. So is a rumor a setup? Well, if you're looking at Amazon went double green back on April 16. April 16 means that, and this was very aggressive, all right, because it was such a fresh uptrend, but I sure don't want to be short Amazon. So anything that happens after the pullback in a double green, rumors, just general rallies, whatever, even the idea of earnings coming up, that's on a setup to me, right? Rumors can't be setups. Market structure can be, right? So I think the market structure preceded the rumor by days, right? So what I'm trying to say is Amazon was a buy on the pullback long before the rumor came out. So as long as you stick with market structure, gang, most of the time, and it's amazing how often this happens, you're going to be on the right side of the market before these rumors. So, keep that in mind. And with that being said, gang, it's time for me to run over into the futures room. Thank you, as always, for being a part of our Charts and Coffee. And I will see you all tomorrow. Same time, same station. All right, gang, be good to each other.